Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson I'm going to show you an incredibly accurate bearish continuation pattern, but it's the context of the overall pattern that made it such a high probability setup to trade stock and options on. These are just a few of the many bullish setups that we trade. Very simple red and green candlesticks, and this applies to any instrument on any time frame. And then this is our starting point for an analysis of a trade. Then we take this picture and we see where is it in connection with the overall trend. Is it on support or resistance? What do multiple time frames tell us? Is it showing relative strength or weakness? What are the broader markets doing? Then we just simply enter and manage in between. So I'm going to describe here, this is a daily chart of Daku. Notice our simple color-coded candlesticks, color-coded volume, and we use these three moving averages, which just helps us speed up the analysis, observing trends on short, intermediate, and longer term. So we got the 20, 50, and 200. The trade I'm going to show you is what's called a bear 1, 2, 3 continuation, which is just the opposite of this one. It's a wide range bar, which means it's a big fat real body bar with little to no tails. Then you have one or more inside bars, and then you simply buy over the high of that couple of bar setup. Every one of these also applies to the short side. But let's take a look starting here before we lead up to the particular strategy. So this gap down is what we call trying to repair the damage, but notice all of these tails at major resistance. It couldn't go any higher. I'm guessing this was earnings or news, really bad news, because that is a nasty gap that's dragging these two moving averages lower. And then it rallied up to resistance. So this prior low is what we call minor resistance. And notice these cones now. So this was attempt number one to consolidate and break out into this void, and it failed. This is what we call a bull sandwich, which is a big fat green bar sandwiched between two fat red bars. And now I have two more topping tails. That is a short-term top. Now it's still just going sideways. It doesn't want to give it up. The bulls and bears don't know, is it going to break out or break down? But what we do know on this one is it's a 4-bar reversal. It's like this one, the same bull sandwich, but I have two inside bars. So let's call it a double bull sandwich. This actually was tradable as a new breakdown, and then it snapped right back. More indecision. But what I do know is I have major resistance at these two marked areas, and then the dots here on our computer mark off major pivot lows and major pivot highs. So I have these major pivot highs and the rounding top. Now we had a bullish gap this particular day that gapped deep into resistance. What do I do there? I don't know, but I'm going to watch it. If it, for example, were able to take out the 30-minute high, this could have turned into a long trade. But it immediately got overwhelmed with selling and closed the day with a wide range expanding engulfing bar that was a closing breakdown from this multi-week consolidation. That is very bearish. Could we have shorted under the low of this bar? Stop over the high? Absolutely. But we got a gift instead. We got an inside bar, rallied about 50% into that bar, stalled at the 20 and converging 200 moving averages, closed green, so that's above the open. We gave this to our subscribers to short under the low of these two bars. And it's the bearish 1, 2, 3 continuation breakdown at the 20, 50, and 200 all together here. And that's why I call this pattern a 1, 2, 3 knockout. And it's also what we call a bearish 1, 2, 3 continuation. The gap up created an upside shakeout at major resistance, closing breakdown. Now I have my inside bar. This was an overwhelmingly high probability short setup. This is my what we call a price void, which means look to the left, and because of a momentum move, there is little to no support or consolidation to permit a nice fluid move back down into the void. So it gapped down this one particular day, so we covered a third right here, and then we're just in simple trail mode. Excellent setup, excellent easy management. We gave that trade to our advisory swing and options trader, where we trade stocks and options, long and short. We could have also traded options by buying puts, buying put spreads, selling out of the money call spreads. It was a fantastic setup. Go to mastertrader.com/advisory swing to read about it. Hope you enjoyed that. Any questions, as always, email my partner Greg Capper or me. Look forward to seeing you in the next trade review video.